Hello everyone, today is the 11th of June 2021 and today is the last trading day of the week. In this video, we are going to run through our 5 most focused markets, the Euro dollar, gold, Nasdaq, WTI and the Bitcoin. So we will run through each market in 3 simple steps, which is what has happened, what's going to happen, and what is our trading plan. So you can make your own decision whether or not to take up our trading ideas. Right, so let's kick off with the euro against the US dollar. So since we are on the very last day of the trading week, let's quickly take a look at our weekly forecast and see how it has went so far. Alright, so we kind of expect that the price will come down first because it is at the top of a range, if you can see. So what has happened is that because this week we have the ECB press conference, so I think that's one of the reasons that the market is kind of not able to come up with a trend. But after the ECB press conference, what we are still seeing is that the price is still registered at this neckline level, right? So in a way, I still think that there is a good chance that we will see the price still going down either today or the following week. Alright, so let's take a look at the chart itself. So in the 4-hourly time frame, alright, first thing to take note is this rising channel, which has been broken below. So that is the very first sign that, or rather that is the reason why we want to sell the euro against US dollar, because there's a breakout of a rising structure, and of course at the same time at the top of a entire range, which in this case it might form something like a symmetrical triangle. And then going forward, we have a falling channel. And right now, even after ECB press conference, I know that yesterday there's a little bit of whipsaw here and there. Very pity that it didn't go down all the way. It still came back up. But at the end of the day, the price did not close above this resistance, right? And also at the same time, it did not close above this falling channel. And right now, we are still seeing resistance, and therefore, I believe that it is a good chance for us to try selling again at this price, since there's resistance and we can have very tight stop loss and we have huge potential on the downside. Alright, at least we can see it all the way back to the previous low right here or somewhere around this area, which obviously is a demand zone about 1.20. let's just put it as 1.2020. Going even lower, alright, it has the potential to come all the way back, alright, to the bottom right here. Alright, this is a much stronger demand zone. As you can see within this area, there are very strong trend forming right here. So this is at 1.2 flat, which is a whole number, alright, or a psychological number. So that is for the euro against US dollar. That is the plan. The plan is to sell like almost right now with stop loss just right above the previous high. If you want to be aggressive, it can be slightly lower, and then we'll just hold. If it goes down well, I think we can actually hold through the weekend, although you might want to take partial profit and stuff like this if you're short and it goes down, but of course over the weekend there's always a risk. So a good practice will still be just closing the trade and try to enter the trade again on the following day. Alright, so the target wise I already shared just now. So that is pretty much for the euro against US dollar. Now let's go and take a look at the gold. So of course we are going to take a look at the weekly forecast. So we expect a pullback, right? And therefore there's a pullback, touches the bottom of the channel and it started to go up. So this is exactly what has, yes, went as what we have expected based on our weekly forecast. And if we look at the 4-hour time frame right here, so during the press conference and a bunch of news such as the CPI, US inflation rates, it pulls back, it spiked down actually, touches this level. This level is exactly what I've mentioned yesterday during my video. Alright, so do look out for my video, because often at times I am able to identify such level with high demand where price touches and go. Alright, so it went up and right now it has broke out of this, alright, this falling trend line, or rather this entire consolidation structure. So therefore, going forward, definitely I'm expecting the price to go even higher. So as for today, if you want to ride on the trend, okay, my practice is always wait for some sort of pullback, right? Just don't try to chase the market when it is at a high, because right now it is still right sitting at the resistance right here. Who knows, it may pull back a little bit first before it continues to go up. All right, so I think a good price going again could be somewhere right here. All right, it's very near. Okay, 1896 to 1895. This area could be good enough to just go in, or otherwise it will be right here. This is a much better area to look for, right? 1892 to 1890. But it's just that if a trend is strong, there's a chance that it doesn't come back to this level. All right, for those who have been trading gold, you understand when it turns bullish and when it goes up, there are very little pullbacks. Again, as I have shared many times, you can always enter half position at an earlier price, and then the later half of the position as it reaches one of the best price that we can go in. So that's for the gold. And in terms of target, back to the previous high 1900, of course, all the way, if it is able to go parabolic to 1950. And in terms of the stop loss, well, to be very conservative, you might want to set it all the way back to the bottom of the channel, but that means that your stop loss will be huge, so no point doing so. All right, back to the 1 hour time frame, somewhere right here 1883 will be very enough if it's really a bullish trend, if this breakout is really truly legit. That is for the gold. And next, let's take a look at the Nasdaq. All right, so for the Nasdaq, how did it go? It went up just as what we have expected. Right now it's still rising, it's still climbing, going towards the top of the rising wedge. So again, it is still accordingly to what we have forecast for the week. And now let's take a look at the Nasdaq. If we look at the 4 hour time frame, all right, indeed it pulls back a little bit back to this zone. All right, again, yesterday I did talk about this level. After which it just went parabolic, shoot all the way up, break higher, and right now it's still doing a small little pullback. So as for today, if you still want to buy, I think you can just simply look at levels right here. When it pulls back to the previous high turn supports, you can consider buying it again. But just that you might want to be a little bit wary about the inflation rate, which was the CPI data, all right, released yesterday. It was higher, all right, than expected, than the previous month. So there's kind of an inflationary risk going on right here. Although the Federal Reserve or the government has been saying that it is transitory, it is a transitory phase because of post-pandemic reasons, but apparently it seems to be here and and staying for a good time. If that's the case, it may risk the economy to go into a full-blown recession. All right, it is possible, and therefore, if that is the case, then ultimately, if inflation is too high, the Federal Reserve will have to start tapering, or even to the extent of raising interest rate. Although right now, okay, we don't see a possibility of that happening any sooner, because they have been very committed to raise rate only when it comes to 2023. But like I said, like I've shared all the time, anything can happen, can change when it comes to the government or the Federal Reserve. So that is something that you want to know. And I mean, if the Federal Reserve start to taper or start to raise rates, it will be a bad news for the stock market, because it means, say, the hot money is going to shrink, or it's going to be ended in a way. Then the stock market, which is fueled by hot money, will have to come down. So it's actually quite straightforward. But as of now, I think we still have a case to continue to buy, because hot money is still around. so on and so forth. All right, I'm not going to go too deep into the fundamental side of it. So this is the plan. All right, you can wait for a pullback and try to buy the gain right here. Now, of course, all the way back to the previous high, which will be about 14,040, and all the way to the top of the wedge at about 14,190 to 200. All right, let's move on to the US oil. So for the US oil, in terms of what we have forecast for the week, what we expect is a major pullback. To be honest, it is not what we expect, but it's what we wish for. We wish for a pullback. But of course, at the same time, we do know that the oil prices has a potential to just keep climbing up without much pullback in the process. But the thing is that we don't want to chase at the high right now. So we just have to be patient enough to wait for a pullback to a better price before we buy. Because end of the day, we still want to make sure that our risk to reward ratio is being observed, so that we always risk smaller as compared to our profits. Alright, so let's take a look at the chart itself. So in the 4-hourly time frame, I think yesterday, alright, I did also talk about waiting for the pullback, somewhere right here, and buy the gain at the bottom of the rising channel. But yesterday we saw a spike. Going forward, I think that because we are still seeing resistance at the price of 70, around that region. What the thing is that really we just have to wait. Alright, just have to wait for pullbacks. Alright, pullback to where? I'm still looking at this region. This is of course the best price to buy, somewhere at 67. But because it has been climbing a little bit more, so we may also expect somewhere right here to be a good demand zone for us to buy. So there are two levels you can look at it. One is right here at 68, and then all the way to 67 or 66 point. Yeah, I'll just put at 67, and that price is really good enough to buy the oil. And going forward, of course, we are expecting it to go all the way back to the major equilibrium level at about 76.65. I think I just want to share with you that, I mean, if you're in my Telegram channel, then of course you have read this piece of news. If you haven't done so, do go and read it. Just yesterday itself, we have so many important data that we have to watch out for. Annual inflation in the US, the ECB, alright, they are going to increase the pace of purchasing, alright, this PEPP program, in other words QE. So crude oil, alright, as investors focus on prospect of a strong oil demand amid a post-pandemic economic recovery. Do take note that we have countries that has huge demand for oil and currently is not able to maintain that demand because of the outbreak of the pandemic of the COVID. And if you can guess where it is, yes, it is India. India, of course, they have a very huge demand for oil, but given the scenario right now, given the situation, they are not able to keep up with the demand. But once they got out of it, you can imagine how much can the oil price goes up from there on. Overall recovery in global economic growth, hence oil demand expected to gain momentum in the second half. And yeah, we're going to the second half of the year very soon, and that is also what I think. So oil prices on the fundamental level definitely will still continue to go higher. Okay, straightforward as that. And of course, right, just go and read through it. It is important to have some fundamental knowledge about the markets when it comes to trading. Alright, last but not least, let's go to the Bitcoin. So I think I was going through some of the news alerts, and they were saying that, oh, Bitcoin has kind of rebounded, recovered, and I come over to the chart and I see, oh well, nothing has changed. Alright, so let's take a look at our weekly forecast. So we expect it to go all the way down, and yes, indeed, it went down, but well, so in fact, once it touches this level, I do expect rebound, so which is why I didn't plot another arrow to go down even further. And indeed, it rebounded off back to the top right here. So right now, what's happening? Okay, you can see that it is forming this falling channel, right? Price has went back to this to the top of the channel, And then in the 1 hourly time frame, you might like this. This is a head and shoulder. All right. So right now we have a head and shoulder in the 1 hourly time frame, but I got to remind you that 1 hourly time frame might not be good enough for a chart pattern to really go through. You can still make a bet on it, because at the end of the day, this is an important level, because this is where it broke out, came back to the bottom of this symmetrical triangle. We have the supply zone right here at the top. We have a head and shoulder. If you want to sell it, nothing wrong with it, but watch out for level at 35,300, because there is another so-called inverse head and shoulder formation right here. Look alike. I won't really say it's an inverse head and shoulder. So you have to take note of this level. But going forward, you can just go all the way back to the previous low, about 32,000 to 33,000. To about 33,000 between the level. That will be good enough for you to take profit for the day, right? For the day itself. Of course, going forward, I'm still expecting it to go even lower. So let's see how it performs this week. In that case, just look out for my weekly forecast over the weekend. So that's very straightforward for the Bitcoin. And I think last but not least, let's talk about pound against US dollar. I think very straightforward. The very reason why I showed it is because it is at the top of a range that's going downwards. So once it reaches top, alright, you see it's trying to climb up by a lot of resistance, shoot up a bit, then it came down. Right now the low is lower than the previous low right here. So there's a case to sell, simple as that. It's very straightforward. If it goes wrong, it goes wrong. It goes up, touches my stop loss, that's it. My risk is very small, it doesn't matter. Very importantly, if you look at the daily time frame, you know that in this entire range, it is at the top, right? So that's the reason why I will go for a short when it actually goes all the way back to the top of a range right here. Alright, so this is very straightforward. There's nothing really complicated about it. Nothing much about fundamental levels, fundamental reasons. Just pure technical to sell at a high. Alright, high of the bigger range and high of this smaller range in the 4-hour time frame. Alright, so that's all for today. Thank you so much for watching, and subscribe to our channel if you like it. Hit the like button to help us move on and to support our work. So thank you so much. We will see you again next week.